Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Apple is one of those companies that can be just overlooked in the market because it's such a massive company, $2.5 trillion market cap as I'm recording right now. And it's just hard to fathom how big a company this has become. But does that mean we should overlook it as investors? Absolutely not. There's actually a lot to like about Apple stock right now. It's not necessarily a value stock, but as we go into a very tumultuous time in the market, this is the kind of stalwart company that has a phenomenal balance sheet, a very sticky business, and just continues to churn out cash year after year. So let's dig into the financials and then what I really like about this company strategically long term. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all of my content. And don't forget to get the Motley Fool's top 10 stock picks at fool.com/Rive. Let's start with the numbers here. And you can see over the last year that Apple's revenue has actually fallen just a little bit. Net sales in the fourth quarter of 2022, $117 billion from $124 billion a year earlier. Services revenue was up slightly. That's the kind of revenue from the App Store, from iCloud, from Apple Pay, all the number of services that Apple has rolled out over the last decade or so, trying to take a little piece of the digital business that the iPhone, Mac, and iPads enable. The decline really came on the product side of things. And a lot of this decline came because iPhone sales were down, Mac sales were down. Ironically, iPad sales were up pretty significantly, which I'll cover in just a second. But that's the state of the business. But still, $30 billion in net income for the quarter, just for a single quarter, $30 billion. That's what really shows the strength of this company and how profitable it is, even in a somewhat weak part of the market. Moving down to the balance sheet, again, just a phenomenal balance sheet. Over $50 billion in cash and marketable securities on the current asset side, and then on the non-current asset side, so that's longer dated assets, another $114 billion of marketable securities. These are typically things like treasuries or government-backed bonds that are going to generate some funds, but not real high interest rate for Apple. Just gives the company a lot of cushion. There is, however, a significant amount of debt on the balance sheet, $99.6 billion in non-current liabilities, and there's some commercial paper and term debt of a little over $11 billion as well. So there's not as much net cash on the balance sheet, but that's in large part because a lot of that cash is overseas. So not really something to worry about there. And Apple has very low borrowing costs. So overall, just a really great balance sheet for Apple. I wanted to show the trends here for the category of sales. Now, this is sales dollars. This is not sales units. But you can see that the iPhone sales were down 8% in the fourth quarter to just under $66 billion. Mac sales fell 29% to $7.7 billion. You might remember a year ago was when the Macs were upgraded and people went out and bought a bunch of Mac Pros in particular because they brought back things like the HDMI port. I am actually somebody who did that. So I fall under that category and was part of the bump in sales that happened in 2021. But that reversed course a little bit in 2022. iPad sales, interestingly, were up really significantly to 30%. Now, I would still argue that the iPad is a pretty disappointing product for Apple, given the potential that it has there to play an important role in the ecosystem of products. But hard to argue that a $9 billion business is too small. And then even wearables, home and accessories. So this is things like AirPod, Apple Watch, the HomePod, speakers, those kind of products, down 8% to $13.5 billion. Services, like I said before, was the one highlight, up 6% for the quarter. So that's sort of the state of the business. Apple does go through these kind of ebbs and flows in how much the company grows in any specific segment. So I wouldn't read too much into that. And what we really need to do as investors is think long-term about how the company is positioned. And that's really what I like about Apple as a company right now, is it just has this business model and this ecosystem of products that seems almost impenetrable. The iPhone and Android basically created duopoly in the smartphone business, and it would be almost impossible for another company to break into that. So that's a very powerful position to be. And that's both the start of the ecosystem, brings more people into products like Macs and wearables. And it's also a very sticky business. It's not trivial to change the operating system of the mobile devices in your pocket every day. So customers keep coming back for a new iPhone every 2, 3, 4 years. So that's what really drives the business. On top of that, they're adding more services revenue. This is things like the App Store, cloud services, payment services. There's more and more that we're doing on our phone that Apple is at least playing a small role in, and they generate revenue from that. That is high margin revenue in the range of 70 to 75% margins, depending on the quarter. So the fact that that revenue segment is growing is great for the bottom line because it's so profitable. But the thing that I think is going to differentiate Apple over the next decade is the fact that it's integrated in the right places in technology. Apple's designing its own chips, for example, so it can do things like put an artificial intelligence element into chips. That's something that they're looking to do with Stable Diffusion's technology. So while Microsoft may dominate things like the cloud artificial intelligence with its OpenAI partnership, Apple can play a role by using artificial intelligence on device because it's creating everything on that device, both the software and designing the hardware. Same thing goes for Macs. We're starting to see Macs really start to compete with NVIDIA powered PCs from a graphics standpoint because Apple is able to do all of their own custom design of those chips and then optimize with the software. So that's a really powerful position to be and allows Apple to navigate these changing technologies that are built on top of the cloud and on top of the devices that people have in their pockets or in their homes and off. And Apple can optimize to both of those things. Now, one thing that I'll note is as opposed to the last decade or so, I don't think this is much a disruptive company today as it is a sustaining company. It's a little bit like Microsoft or Intel in 2000 to 2005, where they didn't necessarily innovate and disrupt businesses over the next 20 years, but they continued to grow. They grew revenue, they grew cash flow because they played a more and more important part of people's businesses and daily lives. I think Apple's going to play a similar role. So investors are getting a fairly reasonable value. So investors are getting a stable company. It's not cheap, trading for 27 times earnings, but remember those earnings are down slightly from a year ago. So if we see a bounce in iPhone sales as new devices come out, or maybe an increase in Mac sales, those earnings could go up. That price to earnings multiple could look a little bit better a year or two from now. But right now, I think this is just the kind of rock solid core of a portfolio that investors can have, pays a small dividend, buys back a lot of stock. And Apple is just a cash flow machine that I don't see stopping anytime soon. That's why I think it belongs in almost every portfolio and why investors can still feel comfortable buying it today. What do you think about Apple? I'd love to hear your comments in the comments section below. Don't forget to subscribe to Rive Investing for all my coverage. Thanks for watching, and I'll see you again next time.